morning, good afternoon, good evening, traders from across the globe, and welcome to the 1146th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Good evening, traders. This video is being filmed on Wednesday night. Wednesday? Is this Wednesday? Tuesday? Monday? Wednesday. For Wednesday night, for trading Thursday, that's March 13th, 2014. It is the 1146th installment of these videos. These videos are geared to teach you the art of technical analysis and how to apply that analysis towards trading. As we know, futures trading can be extremely risky and cause substantial financial loss. Futures trading is certainly not suitable for all trading accounts. This is a very, very risky game. You need to know that a stop is your best friend in this industry, and you should never trade without stops. All right, traders, so let's get moving. What's on the board for trading Thursday? Rock and roll insanity this week with the grand volatility out there. We've got, and it's a rare occasion, a double-sided Omni. We've actually got an Omni playing on either side of the market for tomorrow. Maybe it'll continue higher. Maybe it'll stop and go lower. Omni's got a plan on either side. You got to come down to livewithoscar.com. Come into my free chat room, and I'll show you where we're looking to play in the emini, S&P, and the NASDAQ. What else is on the board? Very interesting video I think you're going to find. Traders. Big question out there, and all of you must be asking this to yourselves if you're commodities traders. The question has come to me very many times, very often in the last few weeks. The question is, Oscar, why is gold rallying? Now, you've heard me come in here and do songs. One of these things is not like the other, right? I've done videos about that. I've told you that there is no way you can have bonds, gold, and ES rallying at the same time. Something's going to have to give. Now, you would expect that to be bonds of all things, because bonds, as we know, has been being bought up by the Fed. They're saying now they are tapering. So if they are tapering, bonds should peel away. Can gold go up while the S&P goes up? Absolutely. And after getting this question presented to me enough times, and of course me pondering the question, why is gold rallying? I did a great deal of research, and I came up with a great reason, traders. After doing my homework, I want to take you on a little tour. Let's go have a little education in the fund managers, what I like to call the blue light special, traders. Fund managers around the world sit there and wait for markets to reach their blue light special, and when it does, they react. The blue light special is the 200 bar moving average. Now, this video is going to be about commodities in general. Commodities in general in this video tonight, and the 200 bar moving average, which I have dubbed the fund manager's blue light special. Traders, there are very few markets left that are just getting over the 200 bar moving average right now, which the fund managers watch, that haven't exploded. This is for slightly longer term trading. You fund managers, if you're not listening, get off your butts and listen to this. I got something beautiful I'm going to put on this board in a couple of moments. Some charts that are going to show you why the gold is rallying and why we all need to be paying very close attention to the 200 bar moving average. Traders, with no further ado, let's go look at some charts. Okay, traders, the first chart I'm going to show you this evening is lean hogs. It's not really about the lean hogs. It's about the 200 bar moving average, so we're going to do this pretty quickly. 200 bar moving average, look at the explosion that has happened in this commodity since it got above the 200 bar to lean hogs. Next, live cattle, look at the explosion since the 200 bar moving average. Next, soybeans, look at the explosion since it got above the 200 bar moving average. Next, coffee, look at that monster move. Since when? Since it got above the 200 bar moving average. Look at this. Next, cotton. Has cotton gone up? Yes. Why did it go up? Because it got above the 200 bar moving average. It just keeps going. Look at that big move. Next, cocoa. Look at this. Once it got above the average, it built a series of bull flags and just exploded. The point behind this is, look at how far we have moved up since we got above the 200 bar moving average in all of these markets. Next, orange juice. Even orange juice. Look at this crazy move since the 200 bar moving average has been established. Then there's oats. and there's a huge explosion. And why was there an explosion? Because we got above
the 200-bar moving average.
Yeah, you guys are getting the hang of this. Now, Kansas City Board of Wheat. Here's where it gets interesting. The Kansas City Board of Wheat, look at the wheat. It just got above that average, right? But now we're going to go take a look at the wheat that we trade. Traders, look at how close we are to the average. It just got above. It's right here. That's wheat. Only one of very few. Look at the Minneapolis wheat. It's just barely there. So the wheat is a great candidate for the fund managers to take the bad boy higher. Then you've got corn. Traders, there are very few markets left. I just showed you a bunch. There are almost none left. Look at corn. It just got above and in the form of a bull flag. The corn, although an odd-looking one, still looking like a bull flag. And believe it or not, this right here, if you ask me, is a very nice-looking cup and handle. And we got above the 200-bar moving average. And if you ask me, this bad boy is going to explode. Next, traders, it just keeps coming. It's going to get even prettier now. Look at the silver. The silver just got above the 200-bar moving average, like the wheat. Very, very close to the average. One of the only few that hasn't gone all the way up here since getting above the fund manager's blue light special. Then the grand kahuna, the gold. Why has gold been going up? Because it got above the 200-bar moving average. It's one of the few commodities that are cheap enough to still buy. Gold, silver, wheat, corn. That is your reason why the gold is continuing to rally, traders. The blue light special, there's only a few left. Get them while you can. Traders, was that not exciting? Rock and roll for the 200-bar moving average, right? That is the fund manager's blue light special. I've been doing this for 32 years. I kid you not. They will go after those commodities. That's what's going on right now, traders. The gold is likely going to be a buyer of dips unless you get back under the 200, and that doesn't look likely in the very near future. Now, do your own homework. Pull your own charts. Go back and look at 50 commodities if you want to, and you will see that almost all of them, after hitting that average, have exploded, except for the 4 I showed you. Now, you may find some exotics out there that haven't moved, but I can't take a crowd of omniacs into an exotic market. So let's look at those, okay? All right, traders, I love the charts I just showed you. I know that we're going to have a very interesting day, the emini, S&P, and the NASDAQ as well, but they have nothing to do with what I just showed you on the board with the blue light special. That is something that I am calling a gift to you from Uncle Oscar. Go look at those markets. All right, traders, thank you so much for coming to these videos. Thank you for watching these videos. Thank you for coming to livewithoscar.com. We really appreciate you being there. In fact, I'd be bored to death every day of my life if you guys weren't in that chat room keeping me company. So thank you for showing up. Traders, never trade alone. I've got a chat room with thousands of omniacs. In fact, we have tens of thousands of omniacs. Hundreds of them show up every day in my free chat room. We huddle together. We help each other get through these markets. Don't trade alone. Come trade with us at livewithoscar.com. All right, traders, remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll, traders, and watch out for that fund manager's blue light special. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.